Actually point out on the private side some infrastructure asset plays, yes?
Yes, absolutely. Our infrastructure asset class did great this year, also double-digit returns.
Does the strategy change, do you think, in the years ahead?
Well, it's hard to, whatever. These are volatile times, but long-term investors are trying to match where the market's growing. Of course, infrastructure is going to keep growing. And yes, we actually did a big secondary sale in our private equity portfolio, $5 billion, that recognized some losses over old vintage, but puts us in a stronger position to get good returns in the future.
You're still committed to private equity. It's funny, we had Marcy Frost on from CalPERS yesterday. That's the largest out there. Yeah. They've gotten bigger in private equity. I mean, do you see the pension funds as well growing in terms of the overall percentage weighting?
Not as much as them, but yes. Actually, first thing I did in office was go to Albany that had a law that limited public pensions in New York to no more than 25% in alternatives, and I led the effort to get that raised to 35%. Now, we're still below 30, but we grew from 25 up toward 30. And I think where we are makes sense for the future.
Why is that? I mean, do you see a significant premium in increasing the allocation to private markets? And I ask this in the context of the recent EO by the Trump administration, which is enabling an easier implication for private equity in 401ks. So I'm just curious what the case is here, just because of the concerns surrounding fees, surrounding illiquidity. I mean, you clearly feel like you get enough of a return from it.
We do. Now, look, in some years, the last 3 years, public equities have driven our strong returns. So I'm not looking for a dramatic change. The Yale pension is a majority in private markets. We're not looking to do that. And look, you have to be able to, there's no indexes there. You have to be able to pick top quartile managers and have a really good team to do it. But look, in years, if you look over 1 or 3 years, public equities have outperformed. But if you look for us over 5 or 7 or 10, private markets have still been strong. So we want to be modestly more exposed there, but about the balance we have.
Brad, when it comes to the budget of the city of New York, which whoever becomes mayor is going to be dealing with, what we're talking about, $115 billion or so, right around there, 327,000 employees. People look at the budget for the state of Florida, more than twice the size of New York, roughly similar size. How do you view it, and how should the next mayor view it in terms of efficiencies, and why we can't have a budget that is equal to Florida's and doesn't have to go up?
Well, I will say, by far the biggest things, the two biggest categories of those employees are teachers and cops. And I don't know anybody who wants fewer teachers or fewer cops. So those are the places where we're mostly spending our money. Are there places we can be more efficient? Of course there are. Last year, the city paid out over $2 billion in claims against the city. Can we have less traffic crashes caused by city vehicles? Of course we can. Can we use technology to better address, building efficiencies or noise complaints? Absolutely. There are ways to manage our procurement better, to manage the budget better. And look, we're going to have some real challenges with the cuts coming from the federal budget.
From the federal budget all the way down from Medicaid and state.
If the state sticks the city with some of those Medicaid cuts, there will be challenges. But I don't think there's any, again, mostly what that budget's paying for are your kids' teachers and the cops that keep your neighborhood safe and the sanitation workers and firefighters that fight fires and pick up the garbage. So
and pension and benefits, which I think is as much as $21 billion of that budget as well.
Yes, although getting 10.3% returns, beating our 7% benchmark means we'll save $2.2 billion that we can go back into the budget rather than be contributed to pensions over the next few years.
Is there a sense that congestion pricing is paying for itself, at least on transit?
Absolutely. That doesn't come to the city budget. That goes to the MTA. But yes, it's ahead of schedule for delivering $15 billion for transit enhancements like the Interborough Express in Brooklyn and Queens, but also for new subway elevators, for platforms and safety. So, yeah, I fought hard along with others to make sure that happened, and we're lucky that it did, because if it weren't there, we'd have a giant hole in our transit budget.
We heard from Mamdani the other day on news that the president had weighed in on the race with Cuomo. Do you think he moves the needle for New York City voters?
I think he moves the needle for Democrats to support Zohran Mamdani. So I actually think, looks to me based on the Times reporting like maybe there was a conversation between Cuomo and Trump. I don't know any New Yorker who wants Donald Trump meddling in our elections and clearing some lane. This is a time, I believe, for New Yorkers in general, certainly for New York Democrats, to rally behind Zohran Mamdani and help him win in November.
What if you made of Mamdani's efforts to maybe bridge some misunderstandings with the business community in some high-profile meetings.
Yeah, look, well, I've heard good things out of those meetings. And, when the New York Times asked him, what's one thing you've changed your mind on? He said private sector housing production. He knows that if you're going to get a more affordable city, yes, we want a lot more genuinely affordable housing for the lowest income New Yorkers, but we need more housing overall. It's got to be all hands on deck. I think he's going to be a good mayor. Do
you think the budget can support Zohran Mamdani? I mean, $115 billion, as David just mentioned, and he wants to pay for free municipal buses, free daycare for all New Yorkers from 6 weeks to 5 years, subsidized grocery stores, build more subsidized housing. I mean, if you're looking at a budget that's already the size of the one that New York is currently experiencing, how are we going to afford all of those things just by raising taxes on some of the wealthiest New Yorkers?
Yeah, well, some of those things don't require tax increases. You can use density increases to get more housing because the real estate values are high, and you cross-subsidize affordable housing with market rate housing, as we've done in the area around the Gowanus. But he's been really clear for some of the things, like let's take universal childcare. We'll need Albany's help. But that's a good investment from Albany, and I don't think, what people are excited about. If you tell people we can get every 2- and 3-year-old into good childcare, have more parents working, help those kids succeed, that's a good argument for raising revenue in Albany, and that will be necessary to be able to expand childcare.
But how much would taxes need to be raised for all of these programs?
I mean, look, that's the debate you have. He's laid out a set of plans. If you want to get to universal childcare, so every 2- and 3-year-old has a seat, that'll cost something, but I think New Yorkers want it. You can't have everything all at once, especially if the Trump administration is making cuts that mean that we've got to just keep the budget that we have to cover those teachers, cops, firefighters, sanitation workers. But if you tell people we could have a city that provides universal child care for every 2-, 3-, and 4-year-old, what we'll have to do is modestly raise the corporate tax rate or the taxes on the highest income earners. I think you'll get support, and you'll still have a thriving city.